You're recording?
Yep, I'm recording now. Good evening, everyone. Welcome to, I guess, a weird little weekly prep here. It's only so much you can really look at with this market going down, as hard as it has been. But we'll try our best to take a look at it here. Maybe branch off to a few more different tickers, and just get a little feedback from you guys. And quick disclaimer: anything you see in this video is not financial advice. So it's just a quick discussion amongst traders. So first, first thing I just want to point out, um, is I think I took a picture. Here, let's go ahead and delete all my drawings. I posted a picture in this channel. If you guys are just kind of confused of what was that weird little bar I drew out. So basically, here I'll put it on the screen so you guys can see it as well. This is what I was talking about. This um this chart is just basically showing me that we had on Friday our closing volume for that day, single day trading day, was the highest selling volume we've ever had since March of 2020. So we haven't had volume period this high and since at least the August 5th drop down with the crowd strike. So we haven't had really any push downs this high, and the only thing that comes close is probably right around like Trump's inauguration. But besides that, we have not had at least selling volume by itself this low or this high since March of 2024. So that just indicates to me that there is a lot of positions being forcefully closed aggressively. And when we do get a little bit of a bounce, which we will. Market's not gonna just die completely day after day. We might go lower. I'll say that, right? We could go lower. How low? I don't know.
We are going very low.
Maybe we clip the last lowers highs here. Because our target was around this area here of around 525. Well, a little higher up, around 525 around here. We closed near the last bounce that we had in August. We could have like another low around this range here, building out. So like we could go a little bit lower. But I really would suggest patience and letting the market just kind of play out. Our volatility is going to be very high. Spreads are very, I mean, it's even apparent in futures, right? The bid and ask volume is so spread out. Like, and what does that mean? It means, let's say like we have seller. This is just a hypothetical situation just to exaggerate what I'm trying to point out to you guys, right? We have sellers trying to take positions at 520 and we have people trying to buy in at 500. So that's your bid and ask, right? So if you wanted to buy in, you would be paying for it like really really expensive, and even if you entered a position, you would most likely be down the moment you got into that position. Let's look. I don't think the VIX will pop up at this time, but yeah. So we 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 have our VIX here. It closed on Friday over 40. So I don't know if many of you remember, but I did mention that if the VIX is over 30, I would suggest you just not trade. Go on a vacation. Um and we're at 45, right? So we haven't had VIX like this since that crash, the CrowdStrike crash, right? And then it's especially like hovering in this range where we're above 30 here, hovering in this range. This is like COVID high VIX levels here. So as far as where I think it's gonna go, I couldn't tell you. But I could tell you kind of um generic response on where I think we can possibly have a bounce to, right? So um that would probably be around this area, the top of here, which was originally our 524, 525 level. That's kind of where we opened on Friday morning. So if you apply patience here, even if we go down a little bit, we don't necessarily have to fill this gap here, right? That might be the target for everyone's heads and where they think it's gonna have a bounce and we're gonna fill the gap before going down, right? I do think we bounce a little bit before going down. When? I don't know. It could be Friday at 3:59, right? Like it literally could be at any it could be any point this week, it could be next week, it could be Monday we open immediately at 5:30. I'm not sure. I can't time the bounce. I can't tell you where the bounce is going to where when it's going to be, but where when we do have a bounce, the risk to reward would be fairly nice as far as where we target, right? So we're around like the low 500s area on a bounce. It's not out of the woods for us to get to that 524 level. I don't think we don't gap fill right away. We had a gap fill a while ago with the Trump um Trump election, right? When he finally won the election. We had that huge gap. It took like several months before, or not several months. This is when he did the rate cuts. I'm sorry, rate cuts, and then this was the gap where he was what's it called, elected, right? But we had a gap here near once we had the flush and Powell announced the rate cut. We had a huge gap. It took nearly 2 months before we filled the gap, right? Completely. So if we do even have a relief bounce, my target's going to be like near the highs of Friday's open. Well, Friday's highs is it's open, right? We closed at the bottom, right? Our weekly and our daily candle closed at the bottom. Like wherever we ended the week is where we closed the week, right? It literally stopped at the bottom. So our opening is near like that 524 level that I was looking at for the original target. Did not expect it to drop down another $20, but that's what you get with aggressive panic selling. Especially with if I'm not mistaken, China had retaliation tariffs that they did as well, so it just kind of push things even further down. But I do think if we do have a bounce, it's not out of the woods to have that nice $20 bounce. Wait for that, right? We have several confirmations that we can look for um, to see if we'll get that bounce over. Right, and what I mean by bounce, I don't mean a bounce and we're recovering, spies going back up to 500-600, right? No, I don't I don't see that just yet. And I may not see that for a couple months, even years, right? So what I am looking for, right? So this is the 524 level where we opened on Friday. If we do have a looking for signs of a bounce, one, I want to see us. We're in the strong selling channel for quite some time now, right? And it's holding up. Oop, how do I end? I don't want it to keep drawing. There you go. Strong selling channel for quite some time here. I do think that if we do have another push, grabbing some liquidity in this range, but still holding up our selling, um, for a further flush, it could create that lower high. This can happen at any point, right? We can do it somewhere right around here. We don't need to fill the gap, right? It could go right here and then continue to go down, but we need to have this recovery bounce, right? It's gonna happen. It's gonna happen down here. It can happen down here. It can happen even all the way down to 45. But at some point, we're gonna have a decent bounce. I can't tell you when, but that is what I'm looking for. I would definitely look to see if we can close out of the selling that we have here, create sort of a little bit of a bounce. So I don't have any margins for where that bounce channel is because we're on a just a complete strong selling, right? So I want to see some sort of bounce is starting to take place, right? It could happen somewhere here, where then I can start building out a channel to see where we lead to the bounce, and then get that grab of liquidity right around here and push down. Um, Another clue is going to be when the 5 day SMA, the 5 daily SMA, right? This is your daily level. Your 5 day average is going to start to catch up a little bit. And once we start to get that catch up, that could possibly be the target, right? So where it goes, it's totally up to when that bounce happens, right? If we open right now, we're probably gonna open in a 5 days, going to be like right around, I would say right around this area, around 525. If we open on Monday, it probably will end up being right around there. Um, so if we have any pushes down, it's going to continue to draw down, right? And what we want to see, oh, not mean to do that. Right, it's going to start to continue to fall down. And what we want to see is when a bounce happens, where we slowly start to build up that bounce and break over out of our 5 SMA right here, and create that uptrend slightly before we start to have that further push down. When that happens, I'm not too sure, but that's what I'm looking for. I'm waiting to see when that 5 catches up, and if we can try to have some price action that closes above it with our overhead resistance, is going to be our green level here, which is our green moving average, which is our 20 SMA. So your 20 is going to be that resistance as the 5 curls down. Once we have a break over it, right, whenever we have that bounce, like I said, it could be anywhere. It could be down here, it could be down here, right? Once we start having those confirmations over, you want to start seeing price supporting over the 5, and we don't need to clear the 20. I mean, we could clear the 20 and try to look for, I think the 200's really far up. 200's really, really far up. But if we have the 200 starting to curl down, that could also be a resistance. But for me, a risk reward is going to be in between the 20 and the 5. Um, when that happens, I'm not too sure, but that's what I'm looking for. If we do have, say, a hypothetical situation, right, where we have the 5 start to curl down around here, and we have our 20 SMA starting to curl down underneath it. Once we have that curl above, I think I drew that too far down. Let's draw it like somewhere here, and our 5 is going to be very aggressively down as well. It's going to be something like this. That would lead us to that where we're starting to have a little push down consolidate before we start to close over it, and that gives us that risk to reward where we have that 520 level, right? I can't draw out a pattern because I don't know when it's going to happen, but that's sort of what I'm looking for. I'm looking for our 5 to catch up here. Maybe we get that push over and get that nice little bounce here. That would be the risk to reward, similar to like what happened similar to what happened here, right? We had this aggressive selling for quite some time, right? Aggressive selling. Once the 5 started to catch up, right, it was the sloping resistance all the way down that we were mentioning a few weeks now, right, since the beginning of the year. We finally had that bounce over it, consolidated near it, right? Our 5 was our we were over the 5, right, on a daily. This is the 30-minute, right? So our daily 5, we were over it for some time. That's the yellow line before we tested the area. This is the 30-minute, so it's going to show more candles, but on the daily, it's more of like a test around this range here, and then look above, fail, and then we continue it on our downtrend, right? And then once we broke above again, we tested that area, the 5 again, and our 20 finally curled underneath the 5, right, showing us the failure on that recovery bounce. Once we had the 20 underneath the 5, that was a confirmation that we were continuing to go down. But a gap down and a gap down is not what I pictured at all taking place. So And now we have the five crossing back underneath the 20 here. So I'm looking to see where we have a catch up. So I'm waiting to see that five SMA play catch up, and that will probably be our next play. Um, for any sort of upside bounce. I don't think we bounce and recover. I do see a bounce happening, right? We just cannot be dropping this far down, especially on the S&P. You know, this is a representative of the U.S. government, right? Eh, If we can't possibly continue to keep dropping like this. At some point, there's going to be a bounce, right? And the based on how aggressive we're selling, that bounce is going to be quite rewarding if you can time it right. No one's going to be able to time the perfect bottom of the bounce. Only thing I'm looking for is, like I said, I want to see the five, right? So it could bounce all the way down here and straight up, but I'm not going to take a trade until we get over the five, right? Wherever that is. So if that's the $15 move, that's the $15 move. If that's the $5 move, it's the $5 move. That's the one I'm taking. I'm not gonna take anything to say, hey, I bought the bottom at 580 or whatever, wherever it decides to bounce. That's unrealistic. So I'm just looking to see once we catch up the 5 day SMA, where when we finally get some closures over it, is where I would look to see where the bounce is starting to have that happen. Um, but yeah, that's all I got for you guys on Spy. Feel free to drop some questions in here, and me and Moan will try to help you guys out here with whatever tickers you got.
Smoove, I'll add two things.
Yes.
One, realize that this is a news-based market right now. Like I understand we all look at technicals and we look at fundamentals and how everything else is looking, but right now it is purely
Yeah,
a
one hundred
news-based
percent.
market, right?
Mm-hmm.
This morning, right now, I think Trump announced that they will not he won't budge on tariffs till the trade deficit with China is addressed. And we were already seeing futures drop 3.5%. It's likely going to be, if nothing changes from now until till tomorrow morning, it is very well possible that we get another negative 5% day, right? So
We're almost there
don't
this month. We're
huh?
almost there. We are
Oh, we're
almost
almost
there.
there.
It's 4.8. 4.8.
Oh, jeez. Oh, Jesus. I didn't even see it. Oh,
Mm.
ES is 3 point something percent, right? And I know NQ is 4 point something percent, right? I was looking at
Yes,
ES.
let's look at yes. Yes is close to 4, 380.
Oh, close to 4. Yeah, so it's easy to have a 5% day tomorrow again, right? So we're already at, if it's a
Totally.
5% day, we've already dropped 25 points, which means we're already at 480 most likely today, tomorrow. So it is horrifying to think where we will go. But with that said, there's a door which has been left open. I feel both with this, like with what Trump said right now, and with the tariffs when they were imposed. The tariffs haven't gone into effect. They go into effect on the 10th of April. Till then, we have that window. It might drop really aggressively, and then if there is some sort of settlement that happens, I'm not saying that there will be. I don't know if there's going to be or whatever. Maybe Smoove knows about this. But if that possibility comes around, even to a small extent, we will see that bounce that we're talking about. Like there will be a hard bounce at that point in time, because if on the talks of imposing maybe a 35% tariff, if it can fall so aggressively, imagine if they say that it's only going to be 5% or 10%. Imagine how aggressive the bounce is going to be for there. So just keep an eye on the news every day. You will know it the night before how the day is going to probably play out, unless something changes. Obviously, there's always news that keeps on coming out, but you will see how it is going based on the news that's coming in the night before or in the morning and everything. And right now, it's mostly about tariffs. It's not even about jobs. It's not even about inflation. It is mostly about what reciprocal tariffs are going to be imposed on the U.S. from other countries. The other thing that was there was, I think, some of the automobile makers have paused shipment to the United States now. I think Range Rover and Jaguar, I think, obviously, they're all outside the US producers who are doing that. So keep an eye on all of those things. Like news now more than ever is important in how you trade and the sectors that you trade.
No, absolutely. I think that is a crucial point. But I think for especially people that are newer traders, the biggest thing to keep in point is we are still in, especially for sectors of SPY, the NASDAQ, things like that, we're still in correction territory. For people that don't realize that we are not anything but correction territory right now. We're still under 10%. So a lot of people are still are at the point of like, hey, well, let's freak out. It's not that it's not to that point yet. So I mean, we don't know a lot of these reciprocal tariffs that Trump is calling them. I mean, if you look at it, it's not reciprocal. If you look at what we're imposing on China, if you take our deficit of China, our debt to China, and you take the reciprocal tariff of 63%, it says over the course of 4 years of his next term, basically our debt to China would be gone. And China is the only country that has been able to respond. So take that for what you will. But right now, like we said, we are already down almost 4% on the SPY alone for tomorrow. So I anticipate at least 5 to 8% tomorrow down. So just keep that in mind. But there is also a lot of money to be made in different areas. There are a lot of bonds yields that you can place your money into to have security in to make money for people that are uncertain of what to do in this current market.
I think you nailed one thing, right? That for starter people who are there, like for beginner traders, like me, I'm a little bit more out than I've seen a little bit of a cycle. I think you try to stay away from the market on days where you're not certain, especially. I mean, like if it's going down and
Exactly.
you're
That's
taking a
what I
put,
want you to
that
say.
could make,
Yeah.
yeah, make some sense. But for newer people, stay away from it. I understand the FOMO of a -7% day of, oh, I could have just taken a put and written this down. But the whipsaws in those puts are huge as well. The market doesn't, even on a day, on an 8% day or a 5% day, whatever, the market just doesn't go down straight only. It goes down, it bounces a little bit back up, destroys premium. Absolutely, it did that on Friday. It did that absolutely right. It went down, then it destroyed premiums absolutely for exactly. Trapped a lot of people, and then it went down again, and then it did the same thing again later during the day, I think, as well. So I understand the need for people to, yeah, exactly. Thank you. So I understand the need for people, like everybody wanting to make money. I completely understand it, but and this even goes for like for people like me. I've tried this now. Like when I try to overtrade, like, oh, it's a negative day, oh, we can keep going down, you get caught up because you realize, like, if something's going down already down 3%, when the bounce comes, it's a 1% bounce, for example, right? That in itself destroys, even if you were in profit and if you did not get out at a good time, it completely destroys your position just because of the fact that you're with a bias that, oh, this is a red day. So be very careful of it. Make your target. Don't increase your target just based on the fact that, oh, I usually make, for example, if you usually make $100, oh, today I'm going to make 500 because it is such a red market. Exercise that patience. For seasoned traders, it's easy to say that and easier to do that, but for people who are learning like me, just seriously try not to give into it, because if you'll give into it right now, you'll give into it on the rest of the days where the volatility isn't that much. You're like, oh, today's an easier day to trade. Why not just do it today as well? So either try to sit out or try to take safer trades which are easier to do, make your money, and just watch how the market goes. Tomorrow might be a circuit breaker day, which I've never seen it, to be really honest. At 7%, the S&P can have a circuit breaker trigger. I think it's 7, 12, and 20%, I think, or something of that sort. But that's a big day. That's a horrifying day for most accounts in general. Not everybody, like if you look at most regular people and their retirements, 401ks, college accounts, yada, yada, yada. You don't see that Fidelity, for example, has moved them to a short position completely, right? Yes, they might alter their positions quite a bit, but these are long-term accounts and they do get destroyed. So, it's not a great day just, because of the fact that you can think you can make money. So try to sit it out. Try not to increase your
Tried to
hopes.
drop it in her room, but it's okay. You already had there's one there. I just wanted to return it back.
Oh, sorry, somebody else's.
It's only be there in the
So yeah,
room
that's just
now.
my 2 cents. That's all. I hope I'm not crushing people's dreams or horrifying you guys, but it is the reality of it.
No, I love the fact that you're very brutally honest about that. I mean, I think that is people's fear is they're like, hey, I need to make money. I mean, I think that's everybody's idea and goal
You don't.
is
You
to make.
don't. Let me start. Take it from there. Smooth. Let me take it from here. Plain and simple what Usman and Smooth were saying. Very plain and simple look. We are traders. If we don't have capital, we are worth nothing. Okay. Your first your first instinct in the market is plain and simple to preserve your capital. These type of days are more than enough to wipe out your accounts completely. Okay. Like on a single news, just imagine I took a put and this thing is basically moving up after 5%. You took a put and this thing is basically moving up after 5%. You cut your loss, you're out. And if you look at the VIX move, can you bring up the VIX, please?
The wicks will
I want
probably
you
be
to
in the
put the VIX on
60s
a daily
tomorrow.
chart. Yeah, can you make it a daily chart? A little bit bigger. Okay, a little bit to the left. Squeeze it, zoom in a little bit more. Zoom in. I want that August 24 VIX. The August 24 VIX. Yeah, keep it right there, Smooth. You'll see it like the VIX on August 24, it went up very high, up to 65. Okay, that's the day basically we dropped drastically on SPY. After that, if you look at, but on the same day, your VIX almost dropped to like 50% of like what it peaked at. Like see the long upper wick on that candle Smooth, can you point it kindly? Yeah, exactly here. You'll see like your VIX dropped by and the market made a slight recovery. Okay, which was very nice. Throughout the day, basically your volatility was somewhat mitigated. Look at the VIX on the last day. There is literally no upper wick. It's a full body candle close. You see that? Which literally tells you the volatility is not being mitigated in any way. The volatility is in full blast. So if you're trading here, either have the risk because candles on each side may whipsaw like anything. Okay, especially if you are trading something volatile like QQQ or NQ. It will just whiplash like anything on either direction. When it starts going up, VIX does not mean that it will only go down. VIX just means like the volatility, the implied volatility that's there. Okay. On either side, you can have like huge candles, which we just had in today evening even. Okay, if you look at convert the ES levels to SPY, we just lost about $15 on SPY. So if we closed at 505, literally 506, right now if SPY was open, we're in 490 territory, in low 490 territory, which is very drastic, right? In an evening like this. Okay, so you need to understand like if your target is to make $100 day, if you make 25, be happy. Walk away. Most of us here are not full-time professional traders that our living depends on it. Rather, if we don't preserve our capital now, you might not have the capital to trade next week. Plain and simple. So rather preserve it, go smaller sizes, or just sit out. It's perfectly a good time to sit out, enjoy, learn. Okay, take the trades mentally, see like if you are anywhere, if your trades play out. Because if you can basically mentally play out trades on a bad day, you do good on a good day. Does it make sense? And Smooth, do me another favor. Pull up the SPY chart daily. Pull that August 24 and where we closed on the last day. Literally at the same levels. Okay. But if you look at your VIX on that day, basically your VIX was almost 60. halfway down from where it peaked. You mitigated quite well. For us, basically exactly opposite picture right now. Your VIX literally had a full body close, which means literally like closing at the top. What do you want to do? Auto fit, the first one, auto fits data to screen. No, the second one from the top. Yeah, there you go. Okay. And scale price to chart only. Third one, Smoove.
Yeah,
Yeah, there you go. Okay.
yeah. And I was like, the
Yep,
numbers look
there you go.
weird for a second. I don't know why I have so many decimal points. I don't know what happened there.
But
My chart
anyway, you
broke.
look at it, we closed exactly at the August 21 level. Okay, but because our VIX is so high, I think that's what we are seeing with the futures right now. And just look at the candles, like we just went up like drastically on ES. If you look at it within 2 minutes, we went up and lost like $2 in 2 minutes on SPY if it were like trading right now. So a minute is like $1. It's enough to kill your accounts, guys. So don't do that, right? Sit out, enjoy, do something else, preserve your capital.
These are massive moves. 300 point candles. Yeah. Yeah, I was gonna good
Thank you,
thank you for putting
Marilyn.
out the levels there. Yeah, but yeah, basically a circuit breaker, it acts the same way as like a halt, right? So like but it's a slightly different than like a stock halt. Um I guess because it's going to be like a stop on the market itself compared to like just a hold on a specific ticker. But it acts the same way, and it basically is calculating your VIX, right? So if your VIX continues to grow as high as it is, and it continues to stay above, what that tells you is that on a long or a put, you will be losing. So both directions is a lose-lose situation because the spreads are going to be so massive. Any
Your
one
premiums are
candle,
gonna go high.
premiums are going to go high, and any one candle could go against you, right? So if we look at like let's go to the NQ chart, right? On the 5 minute, let's very say for example, right? So right here, just to give you rough estimates, right? These are rough estimate numbers. On one single candle, this is like $30,000. One single contract, this is $30,000. Um, right? So if you look at just in between each one of those, right? So say if you happen to get in at the bottom here, you're looking at minus $7,000 before the trade decides to continue going your way. Say you shorted here, you would be down negative like $7,000 before it even balanced out. And even if you had gotten in at this bottom, you probably would have been already minus like 3K. Like it would have already been negative from the get-go. And the reason that we have circuit breakers is it's more of like a protection for you guys, right? So and for us as traders in general, it just stops it helps to slow down the volatility for a second because it's the whiplash between the candles are way too wide, right? Like we have from 480 to like this is 500 ticks, right? $500 on NQ, right? Which is like what's that equivalent to tick? I think that's like 300-400 tick
That's
candles.
125 points. That's
Yeah.
125 points.
So that
Yeah. So that's like
this
literally in one trade. You're talking to $2,500 in one candle on
Yeah,
one contract.
so
That's
ima-
impossible to trade.
so imagine this, right? So right here we're on a downtrend, right? Let's say this is a bear flag consolidation, right? Whatever you want to look at, right? Um, what he basically said is we're chopping in a range that is um like pretty much like a two $3,000 range. So every minute we're going up and down $3,000. That's a lot of money. That's unusual, very, 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 very unusual. And it's very difficult to trade. So the stock market has things in place to mitigate that, right? And it basically does these halts to slow down to try to have the VIX settle a bit, because it doesn't matter what trade you take, you would most likely be down off like right away. It's so spread, it whiplashes so much that even on a positive trade, I think Bandit showed us earlier in futures because he was trading futures. You'll see that he entered a trade and immediately was down 1,000 and then closed it at plus 300. What kind of risk to reward is that? That's impossible to really trade. You
He did a
get
very smart move. He just quit for the night.
yeah, exactly.
Yeah. Okay. The message is very plain and simple, all right, for all of us, that be extremely cautious, sit out. Okay, is making money. That is, they have the capability, skills to do that. If you don't feel confident, you don't need to do that. It's better to sit out and not to lose money than go in and risking yourself unnecessarily.
I'm not joking. A couple of weeks from now, you will see hundreds of YouTubers making videos about how they made about this was life changing gains in the stock. I'm not joking about this. You'll see hundreds of YouTube videos from different people coming in. Hundreds, right? It will be full. It was exactly like COVID, like things that happened between COVID and then the recovery that happened after that. You saw like hundreds of new traders making all these videos about it, right? But realize everything is after. Like everything is after, a couple of days, couple of weeks of everything happening, right? Like just don't look at that, don't believe that, please. Like that's neither realistic. Most of the times it like 999 out of 100 it does not happen. One person might have timed the bottom, and like very good for them, that's fine, that's great. But consistently doing that, it doesn't happen. It's called gambling, it's not trading. You're not trading on probabilities. You're trading on hope. So please do not, like, what you see around, especially on social media, is never a good representation of what's going to happen. And I'm sure most of you have realized, you guys have followed a lot of people, most likely. You guys have realized that it probably does not work out. That is why you guys are learning yourself now, looking at charts, drawing stuff, asking questions, right? So do not get caught in the fluff and the hype, no matter who posted, even on our Discord. If we're posting stuff like, if, some of us post stuff out, yeah, we do it, but we realize that, like I got done on Friday, I trade for like a couple of minutes. I was like, dude, like this is like horrifyingly what's happening is horrifying, absolutely. I will just sit it out because, it's beyond my capability to do it. There are some people who are great at it, they can do it. Just don't believe everybody who's out there. That's all.
Most definitely well put. I myself didn't even trade at all Friday. I made it my goal to avoid anything that would cause me to look at it. So I mean, I don't know if you guys what phones you guys got, but I basically disabled Robinhood. I disabled notifications for Discord, and
Yeah,
I
let's go. Just switch off
enjoyed
your
my
phone
day.
and walk away.
Yeah, and I enjoyed my day.
Imagine,
It
yeah,
was
switch off everything.
mhm.
Just
I'm
switch off
sorry
your
if it
phone and
feels
walk
like
away.
I'm sorry if it feels like that all three of us are saying the exact like silly thing of not trading on a very what could possibly be a very lucrative day. I'm sorry if that bursts bubbles, or if that is against your hopes and dreams of like you capitalizing on these big huge moves and doing it. But these are the moves that absolutely whipsaw and destroy stuff. You want to get on days where you are appreciating half a percent every couple of like today you got half a percent, tomorrow the SPY was up half a percent. Day after it was up half a percent. We're like going up consistently, slowly, with consistent volume, all of that stuff. Right now, I understand we're not in bear territory or whatever. We're still in correction territory, but the way that we are correcting, like 5% correction is not generally, that's not how we correct generally, as history has shown us, right? We don't correct that way. Right now we're just falling. Like we're just this looks more like loss of confidence than just correction. So I mean maybe I'm just jaded, whatever you might call it, but that's just my take on it. I'm sorry if I'm venting.
No, no, no.
I
You
think you're doing
definitely,
good.
yeah, you're doing it
Janitor, can we
perfect.
get you on the mic? Because like,
Item 78 said that's the best advice people need to hear.
yeah, cause
This is the stuff people don't say
Here,
enough.
I
Thank you, Renee.
Uh,
Yeah.
the ones my mama get.
Sorry, Karika, what did you say?
Nothing. Sorry.
Okay.
mm,
Yeah. Jared, would you mind sharing your insights? I'm very curious to hear your insights because you have the most experience of trading in markets compared to us. I think most likely he is not here. But anyway, we are giving you the same thing. Okay, Renee is telling you the same thing. Like people will say like this is the time to get generational wealth. I would say someone who is like pretty widely followed by a lot of you here mentioned things about that when SPY was in 560. Okay, now he's like totally vanished it and he's saying like, oh, these are times to be careful and all that. Markets may go down more. So it's like all fluff. Okay, like Osman just said. So, plain and simple, believe in only yourself, protect your capital. When you see the uptrend starting to happen, that's the time getting into trades.
yeah, and
Okay, tomorrow
avoid
we might trade as well if there
mm,
is a clear direction. If not,
Yeah.
avoid it. Chill.
Yeah, I don't mind if the SPY is going down 0.5% every day, right? Like, we're going into correction territory, that's fine. Goes 0.5% every day, 3/4 of a point every day, that's fine. That's completely understandable, right? Like, if you had like um we were correcting just because Nvidia, for example, was so high, or Amazon was like things where tech was just generally valued so high. Like if you're going down 0.5%, that's fine. Like you can go down for 5 days 0.5%. That's completely okay. But consecutively falling 3%, 5%, 5% every day, that's just loss of confidence in the market, which is horrifying to think of. Like I don't use this horrifying word like a lot, but it's just the more you read about it, like in general, of how there's a loss of confidence overall, the more difficult it makes you think of how this is going to recover and what is going to help it recover.
That exactly is what it is. Okay, and always remember fear snowballs way faster than greed. Okay, because if it keeps on dropping, people will become more fearful. Okay, so let's say looking at it, I sell, my wife sells, my daughter sells, my son sells, everybody is literally selling. So what will happen? That will keep on pushing careful about that. Are you trying to tell us, Smoove, that everybody is literally selling? So what will happen? That will keep on pushing careful about that. Are you trying to tell us, Smoove, that you made this amount of money?
no. I'm waiting for you guys to finish, but I just wanted to give. I didn't make this money. No,
Go ahead.
no, no. I was just trying to point out to the team here, like if you it like if you're holding hope for like a put to just go down, right? So like say if you entered a put here and you held, right, it might have cost 500 to get in, and by that time it got here it was probably, let's say, 500, 1500, meaning you made $1,000 profit, right? If hypothetically you held to here, right? But look at the steps in between. So if you entered at 500 on a day when the VIX is flushing right now, and you're getting into a contract at the most expensive value, once it has its recovery, which this is a $20 recovery bounce, right? Almost $20. $15 recovery bounce is insane. By the time it had the recovery, that same contract you got into for $500, whatever the put contract is, right? It doesn't really matter here. It probably went to $50. So you're down $450. So now you wait for at least to pull back, right? It looks like it's struggling here and it's going to go back down to your entry. You're going to close at your entry. Then guess what? You get to your entry and the contract is only $200. So even though it went down, came right back down, went up and came right back down, you still lost $300. And then you have that contract on your watch list, and you look at it later in the day at 1 o'clock, and you realize that, oh, if I only held, it would have been $1,500. That's unrealistic. You would have seen a contract being down over 90% of your initial cost, then watch it at where you entered already be down more than 50% of your initial cost. It's impossible for you to say that you would have held and made that much money. So that's where kind of circling back to like how what Usman said, how
You
the
can.
YouTubers are gonna say that they
You
made X
can.
amount and
You can do
millions.
that, Smoove.
What? You can't or can?
Exactly.
You can't.
In
Okay.
retrospect, 50%.
Yeah. Yeah.
Huh?
Yeah.
You can if you're a YouTube trader. But in
Oh yeah. If
reality,
you're a YouTube
nobody
trader,
will
but
have
I
the
just
balls
wanted
to
to
hold
give you
something when it
guys
goes down 90%.
that's just what I wanted to give you. Of course, these are just exaggerated values, but this is kind of what would be happening, right? You would be entering in a trade that's already overpriced. On any recovery bounce is going to destroy so much money out of it that by the time it gets to your entry price again, you would already also continue to be down. And then you're holding hope to get this massive gains that these YouTubers claim they have, and it's unrealistic. It's unrealistic to say the least. If you add any contract to your watch list, you will see the fluctuation in it much more drastically than the price action here, right? Like if you put on, let's say, a 510 put, right, and you added it to your watch list, and you just see SPY do these crazy, crazy chops, your 510 put would probably look something like, it'll probably look something like this, where it's continue to go up, then it will have a sharp decline and then barely recover. It will never go back to where that initial cost was, because the initial cost right here where you entered was pretty much the highest it's going to be until it creates a new low right here, and then it will start to balance out, and then you might see the climb. But all of this is complete loss in money, right? Just pull up tomorrow. Do me a favor, if you have Robinhood, you just, if you're going to buy a strike, if you just double tap on it, it will add it to your watch list. Do me a favor, all of you do that tomorrow morning, and right before, at least before close, like 3:33 something, take a look at that contract and tell me how much it whiplashed, and then describe to me how your emotions would have been in that moment when you entered a contract. And yes, it probably will end the day extremely positive, but if you look at the fluctuations between it's unrealistic to assume that you would have held being down thousands of dollars or hundreds of dollars or whatever the case is. Um, yeah, PSA over.
I think we should open the floor for questions.
Yes, I agree.
Feel free to ask anyone if you have any questions. Anything that comes to your mind.
All right, I have a question.
Yes,
Go ahead.
go ahead.
Sure
And
is.
going to the bot for options, I'm not understanding, is someone speaking through that with information, or how is that working?
Sorry, say your question again. I didn't get you.
On the bot for options,
Yeah?
how does that work? Because it sounds like there's someone typing or putting in that information into the bot. Is
Uh-huh.
that how?
Correct. Okay. It's not a scanner, like I mentioned that trades are triggered. Okay. And based
I
on
can hear
that,
you.
basically can you hear me?
It was cutting out. I didn't hear you. Sorry.
All right. So, like I mentioned the very first time when we spoke about it, okay, that unlike the stock scanner, it's not. Give me a second. I gotta mute my chat. So basically, it's not a stock screener, okay, or it's not an option scanner. Rather, what it does is basically based on certain algorithms, okay, it triggers orders on certain names. It doesn't take XYZ, whatever names you look like. It takes certain names only, the large names typically, which we trade. So based on those algorithms, the orders are triggered. You get notification immediately. What we'd always say is, if the order is triggered, you get notification even if you're watching it, to you. Okay. For some of the names we regularly put out, like our levels and everything, you should also have your own levels. Based on that, look at it. Based on your risk appetite, take contracts. I know mine very well. Okay. I buy time. I never do zero DDEs. So let's do that. Okay. After that, it tells you like the places where it is scaling out. Okay. So that's how it works. Does it make sense, Sheris?
Um, not really, because
Okay, tell me where you're
when
lost.
it's let me find one real quick.
Mm-hmm.
Uh, was that under option ideas? I don't. No, 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 no.
No,
Hold on.
it will be under
The
the
top.
FF options.
Yes.
Do you want me to share the screen? Smoove, can I share the screen?
FF options. Okay, so I'm trying to go back to the Apple one that you did.
Mm-hmm.